Boeing shares touching a 5-month low, and Southwest having its worst day in 4 years, down double digits. That's after announcing that it will trim its capacity plans and reevaluate financial forecasts, blaming delivery delays on Boeing. Other airlines also taking a hit in today's session, as you can see right there on your screen. Joining us now is TD Cowen analyst Helane Becker. Helane, it's great to have you on the show. And I do want to start right there because we know there's been capacity constraints. There's been supply chain issues for years now coming out of the pandemic. And, of course, now all of these safety issues with Boeing, which is in the middle of 3 different investigations for its MAX aircraft and for its manufacturing processes right now. Just how much is this stymieing Southwest, and just how much is this holding back capacity at a time where travel demand still continues to be soaring for the industry writ large?
Yes, exactly. Thanks, Morgan. You summed it up really well, probably better than I could. The demand is very strong, and it's across the board. Since the domestic airlines kind of corrected capacity in Orlando and South Florida earlier this year, and late last year, we've seen really good results from the airlines. And I think most said that today. I listened to all the webcasts, and what I heard from everybody is that demand is still very strong. Southwest said they're seeing some weakness in some leisure markets. But then when you look at the amount of capacity they have in some markets, that makes sense. But when you think about what's happening with spring break and the forecast the FAA put out for traffic in March, demand is very strong, pricing has improved. There's physically no place to grow at the busiest airports. And this is really, to your exact point, what is stymieing so much growth, because the airlines have to use bigger aircraft in places like New York and JFK, so those 3 area airports. And yet the OEMs are delayed in bringing aircraft to market.
Yeah.
And also, you didn't mention this, but the airlines they've stopped hiring pilots and flight attendants, which I find very interesting as well.
Yeah. How much of an implication is that when you do have an airline like Southwest basically saying that, I guess a silver lining, maybe I'll call it, for the airline at a time where they've been cutting some forecasts, the stock is selling off today, and now they don't have to worry about hiring and labor costs to the same extent that had been originally priced in. Actually, I think we just had a technical difficulty, so we're going to see if...
Helane, did you hear the question?
I can hear you okay.
Okay. Apparently it's on my side. How much of a silver lining is it when you have airlines not hiring as aggressively as what was factored into their financial forecasts?
Yeah, I mean, I think from a wage rate perspective, the absolute wage rates go up at a slower rate. And it also means that as you think about we just had airlines negotiate with pilots and are still negotiating with flight attendants. So we're talking about the next level of contract negotiations, which is kind of 26 and 27. The wage rates won't go up as much because you're not going to be where the industry won't be where it thought it was going to be unless Boeing catches up somehow. So I think that's the way to think about it.